You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike Tusaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Joe Benazzi from OptionPit.com, and Henry the Flowmaster Schwartz from SIBO. The Option Block is brought to you by SIBO. When it comes to trading volatility, trust SIBO, the creator of the VIX Index, for in-depth and relevant information. SIBO's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again. We are firing up the machines here to commence our broadcast week here on the Options Insider Radio Network. My name, of course, Mark Longo, from the website as well as from the network. All the fun stuff that you folks like to binge these days. Remind me, if you do like what you hear, do keep rating and reviewing, whether it's the OB feed, the network feed, whether you get our app on one of the app stores, wherever you want to leave those reviews. Does help new people continue to discover the content. It's hard to believe there are new people, but they are out there. So let's look at March. 1 billion contract month, the busiest month in the history of the business. So yeah, spoiler alert, new people are trading options. New people are discovering options. Let's help them beat a path to our door. Of course, if you want to go above and beyond, get access to all the great exclusive content that is lurking there. Nearly 200 hours worth of content already. Maybe more now. I'll have to go check. Just so much great content there. Great pro Q&A. Some of the best minds in the world of options and derivatives. Options oddities, an unheralded gem. That show alone is worth the price of admission. Come in. If you can't find something to trade or at least analyze from that show and say, that's interesting, then you are doing it wrong. We're putting dozens of them at you freaking every episode there. So that's fun stuff, as well as, of course, live access to everything we do, as well as, of course, the exclusive pro podcast feed. Hundreds of hours there. Giveaways. Congratulations to Don't It Be. You won the March Pro Trading Crate. Get your name in the hat. Join the pro. You're automatically entered to win the April Pro Trading Crate and a whole bunch more. TheOptionsInsider.com/pro. Welcome to all the new folks who keep joining us. I'm remiss in doing that. I should do that more often. Welcome to all the new folks who have been joining us over there. All right, listeners, it is Monday. That means it is time to commence our broadcast week in high style. I should introduce him at the top of the show. Usually this is where I am joined by the greasiest of meatballs as well as the uncleest of Mikes. We got Uncle Mike from St. Charles Wealth Management joining me this week. We got Switcheroo. We got the Rock Lobster joining us as well, Mr. Andrew Giovinazzi. If you know anything from the show, listeners, 80s wrestling is not his strong suit. If I had known earlier that he was joining us, perhaps I would have tried to come up with yet another question involving Hogan and Andre and Macho Man. Those are the three wrestlers that he knows. Nonetheless, we must bravely proceed, listeners. So it is time for our 80s wrestling trivia extravaganza. All right. Let's do it. Technically, listeners, these events we're going to discuss today transpired in the early days of 1990. So they just missed the end of the 80s, but they involve the greatest tag team in the history of time. Also, the 80s tag team champions for most of the WWF there, most of the 80s for the WWF. It is, of course, Demolition. Anyone says any other team, they are bold-faced liars, and you are legally obligated to punch them in the face. But Demolition, great run throughout the 80s, WWF tag team champs. 1990 rolls around. They are still the champs. But in that moment, there were some health issues with one of the people. So in their infinite wisdom, WWF decides to expand Demolition. Previously, they were known throughout their glorious run. It was Axe and Smash from Parts Unknown. That was Demolition. In 1990, they added a third member to the glorious duo. Buzz in if you know the gimmick name or the real name of
Buzz.
All right, go for it, Mr. Uncle Mike.
That would be Crush.
Yes, that would be Crush. Yes, those were dark days for Demolition fans. Crush coming in. So all of a sudden it goes from being Axe and Smash from Parts Unknown to Axe, Smash, and some guy named Crush, who they literally just handed the tag team belt to. I don't think he even had a match in WWF until he walks in. Here you go. You're the champ now. Everyone's like, who the hell is this guy? So there you go. 1 point for the Unkless of Mike's. Mr. Uncle Mike, some bonus points for you. Can you guess the real name of the wrestler who was Crush?
I thought that was his real name.
Yeah, he was born. Mama Crush named her baby Crush, and that was not his real name, unfortunately. That would be cool.
Oh, no, I don't know.
I'll give you a hint. It's the exact same as an 80s to early 90s kind of rocker.
Oh.
Think like a John Cougar, but not John Cougar.
Oh, gosh, I have no idea.
Brian Adams was his name.
Oh, okay. Interesting.
Yes, interesting. I'll give you another chance for a half-point bonus one. Mr. Rocklop, so you can chime in if you want as well, even though I know you have no idea about any of these. But there's two gimmicks we don't speak of on this network. I'm going to mention both of them today. Both of them involve Demolition. One of them is Crush, and the other one is another gimmick that Smash took on that is one of the most infamous, one of the worst gimmicks of all time. Can you name that gimmick, sir?
So this is a WWF gimmick of
Yes.
what he did. So he crushed, smashed, I don't know, he must have smashed something. Like, did he invent the whacking the chair on somebody's head or something? I don't know.
Alas, chair whacking, not known as a gimmick.
Okay.
Mr. Uncle Mike, sir, can you steal it? Do you know the other gimmick that I am talking about that shall never be named again after today?
I'm going to guess the Repo.
Yes. The worst. You know what's crazy? I didn't realize this. They started Repo Man while he was still Smash or Demolition. He started doing house shows as Repo Man. So he was still,
Oh, my goodness.
he was still Smash. He was over, super popular gimmick, and they started having him do Repo. What? I don't know. Terrible stuff. So we spoke of it today, listeners. The two gimmicks that shall never be named again here on this network, Crush and the Repo Man, as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, listeners, let's get the taste of Repo Man and Crush out of our mouths, shall we? I'm not sure where the spirit possessed me to do a Crush and Repo Man one. I don't know. Enjoy it, because I'm not going to do it again. Instead, let's get into these markets. And maybe if you're a bull, maybe you don't like the taste of these markets either. It's not like it's a bloodbath out there, but we are hanging out in the red right now, off about 0.25% in the S&P. The Dow off about 0.15%, and the NASDAQ off about 0.33%. We're seeing our vol friends, though, even though we're coming back into the start of the week and we're down, and we should ostensibly be getting a little bit of the old weekend back. We were still down coming into the start of the show. VIX was threatening the 17 handle at this point, 1730. Down about 0.8 of a point from where we were this time on Thursday. VVIX at an 83, so that's hanging out unched. VXX, I keep talking about how I need to spend more time with this thing. Get down another 1.5 handles, breaking through the 40 handle, listeners. 39.80 when we kicked off the show. UVXY, this thing is just heading to oblivion. I don't know what the hell they're doing with this thing. It's 380 when we kicked off the show, down another 1/3 of a point. I guess they're going to wait till it goes to 0.01 before they reverse split it. I don't know what they're doing out there. SVIX 18.5 up 6/10 of a point. That's, of course, our inverse friend there. UVIX 1240 down a point in the other direction, and VolQ at about a 21 even when we kicked off the show, down about 2/3 of a point. All right, Mr. Uncle Mike, as the I'm surprised Andrew didn't know Crush and Repo Man, but as the surprising winner of our trivia battle for this week, sir, you get to go first. What is catching your eye out there in a slightly non-Uncle Mike type of day?
Well, and, just getting back to the demolition real quick. I mean, I know we've already had 2 Twitter polls on the Road Warriors versus the demolition with our listeners. And so the Road Warriors were 2-0. And the other thing that I'd like to mention.
Who knew we had so many liars in our listening audience? I mean, why would they blatantly choose the wrong choice? It doesn't make sense.
Well, I mean, here's the thing. It's settled in the ring. The Road Warriors are undefeated versus the demolition. And the other thing that you might want to know, the greatest wrestler of all time, in your opinion, which I respect. I don't agree. He's not my all-time favorite, but I do respect the man as the Ultimate Warrior. When Axe, Smash, and Crush were together as a 6-man tag, the Ultimate Warrior chose to team up with the Road Warriors, and then they beat Axe, Smash.
I know, that is
Crush.
sad.
So,
You'd think they'd have a team from Parts Unknown, Ultimate Warrior and Demolition together. It's 2 great tastes that taste great together, both from Parts Unknown. How could they not make that happen?
Well, they didn't, and the what happens in the ring, I mean, that's the real thing, and I mean, the Road Warriors beat them, so not trying to beat a dead horse, but facts are facts, so facts are facts.
I think that came around in the Crush era, and as we all know, that's non-canon. We don't count the Crush era of Demolition.
Well, I mean, still, it's what happens in the ring is what counts, so We've already had this settled both by our listeners as well as in the ring. So that's my story, and I'm sticking to it. With this market, we are down a little bit on the day today. We were slightly down on Friday. We're slightly down today, but we just had such a massive run last Thursday, and the market's just been kind of on fire lately. It's just kind of coming back to earth a little bit from what I can tell of it. It'll be interesting to see in the coming days and weeks with earnings season upon us where this market goes. But for right now, the 4100 magnet, the Giovinazzi 4100 magnet, is still holding somewhat strong. A little bit of a sell-off in bonds, but I think once again, it's just kind of the 10 years had such a rally recently that it was a little bit of gravity coming down a little bit. So we have that going on today. Oil still holding around the 80 mark. Natural gas up 14 cents on the day, which 6.5% roughly. Not a huge move for natural gas. I think that in looking at the sectors, not a major like one thing moving one thing higher or whatever, but we are down a little bit, roughly 1% in the energy. And so I would say that's probably what's keeping us to the negative side right now in the S&P. But overall, there's really not a ton happening right now. It would be a great day to be a premium seller, at least at this stage. We don't have a lot of movement in the VIX, don't have a lot of movement in stocks, but we'll see where things go. I think that market's waiting patiently on earnings, possibly the Fed, but they want to hear earnings first. And then, of course, the Fed will have a part in it from where we're at on it. So not a ton happening, and that's what I'm seeing.
All right, now we turn to the rockingest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com. This is normally the part where I would ask you your enduring memories of demolition, but I know you do not have any. If you, by some miracle, do, by all means, share them. They are, after all, the greatest tag team of all time. And then B, what's catching your eye out there in the markets today, sir?
Besides the squirrels eating all my birdseed, they're driving me crazy. I had to find an anti-squirrel thing. I'm starting.
It's called a shotgun. The same thing you have for the anti-pirates. There you go.
We got baffle. Do you get a baffle?
I think to keep them from climbing up.
Yeah, we have I'll text you a picture of what we have. It works great.
Yeah, I'm about ready to put some in. I've got some extra like sheet metal laying around that's kind of bendable. But yes, definitely text me a picture of it.
We'll do it. We have, because we had a lot of problems with the squirrels, and this has just totally gotten rid of all of our problems.
Well, I like the sound of that.
I wish I could share all your squirrel problems. We have different problems here in downtown Chicago, not quite the squirrel variety.
Yeah. I saw Chicago had kind of my wife was like, I don't know if I want you going to Chicago. I know a lot of people there.
Good press for us once again. No squirrel problems though, so we win in that department.
What they did, I heard anyway. Just admit them. Talk about how do you deal with risk control, but having the Magnificent Mile getting run over by people. Anyway, market wise, what's weird? You look at VIX is low as it's been all year. I think at least certainly for 2023, and I'm trying to remember the last time in 2022 it was a 17. It's been a while. Realized vol is at 1 year lows basically right now. For S&P 500, I'm starting to see implied volatilities on a lot of major names at 1 year lows. Generally that's how markets start to rally because they just, first off, they have to stop going down. And that's kind of what the 4,100 magnet idea is like. Okay, well, then at some point it stops. Stocks stop going down, and they start going back up. So right now, and I think that's what we have. A lot of major bank earnings have come out. So my big question was, was it just those three banks, or how many banks went to the window from the Fed over the last month to swap their securities for cash in case they needed it? I don't think they loaned it out right away, but I mean, you kind of look at it. Look at the day the Fed announced that big QE window, and gold straight up, silver straight up. I mean, it's pulled back the last couple of days, but the gold miners kind of straight up. But look at some of those numbers; they're pretty spectacular on how far they went up. So, I think, but now here's the thing: the thing that was rallying us before, when we have those ripping rallies, maybe to 4,200, or even I think we got as high as 4,300 last year at one point, was the fact that the Fed was going to pivot and stop raising. Or the assumption that that's what they were going to do. And that was, August 4,300 was our last 40 top peak. We're still not back to the peak we were in February, which was 4,187. So both of those rallies were predicated on the fact that the Fed was somehow gonna stop raising. So that's like, and I think at this point people are just accepting that, hey, these rates are going to stay where they are for a while, until inflation is back down. So I think the reality of that staying there could turn us into just like a regular market with lower volatility, and it's back to okay, what companies make money, what companies don't. And it's a little bit less of just whatever the Fed's going to do. I think that's we're just sort of settling into that reality. Now, does that take us a whole lot higher? I don't know. But I think at this point, on balance with, vol starting to get to lows, I mean, we could see higher numbers, but slowly but surely. And I guess the next thing is also the big tech earnings are coming. And is that going to help? Like, are they really going to be that great to propel stocks higher? So, I mean, in January, the Qs are up, 15% for the year. So it's pretty amazing. So we'll see if that actually that's enough to just send us higher. But I don't see how the Q stocks could do that well to keep it up. But it's certainly possible that they could.
Let's see what else is going on out there in the market today, listeners. Let's kick it off with the major indexes. See if they are playing ball out there today. And the answer is mostly yes. A VIX looking respectable, 482,000 contracts on the tape right now. That is certainly nothing to sneeze at. especially when you see that the ADV keeps moving back in the wrong direction, down another 34,000 contracts from our show on Thursday, 745,000. That's the ADV for VIX right now. That's still pretty rocking, all things considered. When it was threatening 900,000, we knew that wasn't really sustainable. Even this level is pretty high, so we'll see if we can sustain this. But looks like on path to at least threaten it today. SPY, 4.1 million. SPY is pretty much always right around 4 million this time of the show. It's like clockwork. The ADV, 8.5 million contracts out there. The S, 1.35 million. That's pretty close to where it normally is right now, too. Usually it's right around that to 1.5 million. The ADV, 2.65 million out there. Small caps, IWM, 320,000 contracts. Going to have to do a heck of a lot more paper if it wants to maintain this ADV, which is ridiculous, 1.2 million. That's a lot of paper for small caps. A lot of that driven out of the annihilation we saw out there in small caps, and then, of course, the rally. We'll see if we can maintain this 1.2 million ADV. My guess is probably not. And the Qs, 1.53 million. The ADV, pretty much exactly 3 million. So Qs pretty much on pace for another normal day out there as well. Let's keep rolling out to the single names. Let's see if it's a day that the market forgot the single names or if they're playing ball. It looks like the answer is, yeah, it's pretty decent. 244,000 contracts. That's what it cost you to break into the top 10. So that's actually nothing to sneeze at. I mean, it's not 350 or something like that, but it's certainly not 150 either. So a respectable day for the single names, all things considered. And you should probably start to expect those again because we are coming into earnings season proper again. And that usually tends to juice up some paper in the single names. It also, for the show here, makes it fun because we get to see some new names breaking into the top 10. It's not just your Microsofts and your Metas and your Apples and your Teslas, even though they're there as well. So let's get out there. Number 10, we've got our old friend AMC. This one's kind of been all over the place, trading 520 right now, up about 7 cents today. You know, on this month, you'll see a month ago it was 418, then it shot up to 515. I think that was the early wave of those Amazon rumors. Then they crushed it down to 391, and then back up to about $5.50. Hit that just last week. Now right around 520 out there. So it's very much a will they, won't they dance? What's going on for AMC? The borrow rate starting to soar out there. Are we looking at another squeezy McSqueezerstein, as the meatball likes to say? Are we back in those days? Are we squeezing AMC again? Is it 2021 again? I must have not gotten the memo. Either way, 244,000 contracts on the tape for AMC. Number 9, we've got good old Chucky Schwab breaking into our top 10 today. Obviously, we are in earnings season. Financials kicked it off on Friday. We're seeing that financial fun continue. You know, Chucky Schwab has been under some scrutiny of late, shall we say. A lot of folks had their sights firmly fixed on this one, saying, you know what, they're the next big name to fall in all this contagion fear. And it hit them pretty hard. They were trading $76 when all this contagion noise started breaking in March. And they crushed it right away down to about pretty much almost exactly where it is right now, 51.91. And we've kind of bounced in this range for a while, got up to almost 60, threatened 60 a couple of times, never actually broke it. Then they took it down again, back down to about 48.80 or so. And then looks like they have since rallied it, obviously, from there, but not a ton. So it looks like Chucky Schwab managing to beat their numbers, maybe convincing some folks that, at least for the time being, they're not going the way of the dodo. Good for 282,000 contracts out there for good old SCH. Let's just look really quickly for curiosity's sake, listeners. Let's see what the hot trades are out there in Chucky Schwab today. It's 28,000 of the May 62 halves. I said we're trading at a 52 right now. May 62 halves. Well, I would not have guessed that. So let's dig in really quickly, see what's going on. All of a sudden, sure, my thing's going crazy. Doesn't want to show me what the trades are. All right, well, we'll come back to that maybe in a little bit. But Chucky Schwab, lighting it up out there today, listeners. 282,000 contracts. Right above it, 2,000 more. Good old Microsoft coming in, 284,000 contracts. Takes a lot to unseat most of our usual top 10ers, even though we don't see Meta in there today. So maybe some change-ups, which is always refreshing. Microsoft up $0.50, trading 286.70 or so right now. Again, not that far away from their 52-week high of 294, about 20 or so. So crazy times out there in good old Softy. Good for 284,000 contracts. And the number 8 spot today, Number 7, Chip Zone coming a little early. Usually we expect it at number 6. Today, number 7, 296,000 contracts for AMD. AMD actually off today, off about 2 3/4, trading right around $89 right now. So apparently chips can sell off, and they're selling off a little bit today. We'll see if NVIDIA is following suit in a little bit. Oh, spoiler alert for another name in our top 10. Before we get there, let's go back to a name. I used to joke about this name. When it was in the top 10, it was probably a quiet, a sleepy day. Maybe we have 140,000 is what it costs us to break into the top 10. Ever since their most recent earnings, and of course, this whole AI brouhaha kicking off, Google, aka Alphabet Class A, has been a frequent offender in our top 10. Coming in again at number 6 today, 312,000 contracts. Google off 3 and about a third, trading right around 105.5 right now. Their 52-week low, 83 and a third, 52-week high, 131 and about a half. So hanging out pretty close to the middle of that range. Number 5, it's the other half of the Chip Zone, listeners. It's NVIDIA. Is it following suit? The answer is yes. Off $1 and a third, trading 266 and a quarter. Good for 322,000 contracts. Then number 4, the Amazonians coming a little early today as well. 332,000 contracts for them. They're off about a quarter, trading 102 and a quarter right now. Maybe it's time for a new version of that death poll. Or maybe not the death poll. That was the one we did with AMC and Bed Bath & Beyond. Looked how well that one worked out. We did that right before the meme stock palooza. Maybe it's time for another face-off poll of Amazon versus Facebook, because Facebook certainly did well post that poll. Amazon, not as much, still hanging out close to those levels, but good for number 4 today, 332,000. Which would you rather own right now, listeners? Meta or Amazon? Might be a good poll to put out there again. Number 3, it's the fruit company coming in a little lower than usual. Again, usually hanging out number 2. Today, number 3, 352,000 contracts today, off 61 cents. So the market has a sad face because Apple is red. 164.60 is where it's trading right now. About almost 12 points below its 52-week high. So still looking pretty rich, pretty frothy out there for Apple. Number 2, it's BAC. This one, ever since all these contagion fears started hitting, this one's done some sneaky paper out here. Today, number 2, 413,000. Again, I will point to you that Friday when all these contagion fears started hitting a few weeks ago. Everyone who's saying, hey, we can't possibly do 0-day single names. Think of what a disaster it would be for clearing and settlement and everything. Bank of America did 1 million contracts on expiration Friday, and it was all stuff expiring that, I would say 90% of it was all expiring that day. So it can be done. When I go down to the OIC conference in a week or two out there, I may put that to the folks over there at OCC and others saying, hey, come on, what are we doing here? We can clearly make this happen if we want to. And the folks want it. The folks want 0-day Apple. Make them happy. You want to hit 2 billion contracts in a month? This is the way, as they say on The Mandalorians today. Bank of America, 413,000 contracts on the tape, up about 2/3 of a point, trading $30.20 right now. Good for number 2. And you know what number 1 is? It is Tesla. 785. Man, that is light. I can't remember the last time we saw Tesla below 1 million. Probably back last August or December. 184.40, off about 0.6 of a point. So a little bit of a light day out there for Tesla on the movement side and on the volume side. Interesting day out there. You know what else is interesting, listeners, is that we're back in it. So if you're loving yourselves a little bit of the old earnings season, and who could blame you? It's a fun time when you could, as Two Sauce Les, forget about the Fed. F the Fed. That'll be our hashtag. Instead, look at some actual micro and single names you could sink your teeth into. Do some actual analysis, things that usually make some actual sense and makes it a little bit more rational for you if you're kind of done with the will they, won't they dance that we've all lived in with the Fed for years now. Earnings season, a little bit of a respite from that, which is nice. Today we had Chucky Schwab. Tomorrow, Bank of America, J&J, good old Netflix, and United Airlines. So we got quite the cross-section tomorrow. We get, J&J, they make a little bit of everything. We got Netflix on the streaming side, airlines, and the financials. Wednesday, Abbott Labs, NASDAQ, some name I've never heard of called Tesla, Alcoa, Morgan Stanley, and Discover. Thursday, American Express, Rite Aid, AT&T, and Nokia. They pronounce it a couple of different ways out there. And then Friday, it's P&G. What do we have today? We have by the way, you want to check these out for yourselves. These are hot off the presses from our friends over there at ORATS. I do believe I'm going to be joined this week by Mr. Matt from ORATS to break down all this fun and a lot more on the advisor's option. So stay tuned for that. And this morning, we have Chucky Schwab popping off before the bell. They were 50 3/4 going into their announcement. They were pricing in 7.6%. Get this, listeners, they moved 0.1% as of the time of this report, which was a little bit before showtime. So, wow. Premium sellers unite. Premium sellers rejoice. I mean, we just talked about them. They are moving a little bit more now. They're up about 2.25%, but still a whole heck of a lot of nothing from what they were pricing in. So, wow. That might be the premium right of the season to kick things off. We shall see. I'm sure we'll have others that are out there too. Bank of America before the bell tomorrow, 29.5 is where they were trading when we ran this report. They're pricing in $1.36. In the past, they've moved 92 cents. So a little bit of extra juice in Bank of America. Who the hell can blame them when contagion fears hanging like a sword of Damocles across the entire financial sector? Who can blame them for having a little bit more juice baked in this cycle? J&J tomorrow before the bell as well. 165.84 is where they were trading. 310 is what they were pricing in. In the past, they moved, get this, 320. So big shrug of the shoulders for J&J earnings. Let's keep it in the broad manufacturing side. Let's go to, and consumer products. Let's go to P&G. 151 even is where they were trading. They're on the 21st before the bell. They were pricing in 3.25. In the past, they moved 326. So apparently, big consumer packaged goods is saying this cycle is going to be a whole heck of a lot of nothing. In terms of the season, we are off to a banger start with a whopping 9 names reporting so far. We are at 105% for the season, listeners. We are actually, it's like they adjusted their average. I've talked to Matt about this. It was saying 92% before, 96%. Now it says 77 is our long-term average. I'll need to check in with him on that because that has changed almost 20 points. I'm guessing might be a bit of a hiccup there and some of the, I'll check in on that before when I chat with Matt this week, listeners, on all that fun. In terms of earnings trades, no new ones going on the docket today. We are still tracking, as of right now, 75 calendars and 75 straddles, I should say, and 49 calendars for your earnings trading education. TheOptionsInsider.com is the place to go. Click on the Options News and Articles tab. Find all that goodness for yourself. Speaking of goodness, we got some more in store for you because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. Time to get a little weird. Time to get a little wild. Let's kick it all off in the energy sector, listeners. This is with Cenovus Energy, Inc., ticker symbol CVE. This is a Canadian integrated oil and natural gas company out of Calgary. I know a few Canucks in that neck of the woods over there in Calgary always tried to convince me that Calgary was just paradise on earth. And I would tell them, well, don't you have massive walkways connecting your skyscrapers to keep you out of the snow? And they're like, yeah, but Stampede is amazing. So, and to each their own, I suppose here. Ticker symbol CVE, trading 1772 right now, up about 20 cents on the day. On the year, let's see, a year ago it was trading $18.12. So it's net off a couple of percent on the year, but it's kind of been a whole net nothing year. They got to their high on June 7th, almost June 8th, listeners. June 7th, 24.91 was their high. And then they hit it right back down by July 14th, was trading 15.85 again. They tried to rally it again in November up to 21.61, but that was about all she wrote. In the meantime, it actually hit its low for the year. In between then, September 26th, got down to 14.44. It threatened it again, didn't quite get there. It got down to about 15.5 in March. And since then, it has rallied a little over about 2.25 points back to where it is right now, 17.74. And Mr. Rock Lobster, it seems like they just opened the floodgates in this name today. Someone said, hey, do you have any calls listed on CVE? And when they replied, the answer was yes. They said, okay, we will buy them. They said, which ones do you want? They said, all of them. Because there's just a call palooza going up out here in CVE. We first noticed 9,408 of the June 22 calls going up for 20 cents. Paper lifting the offer. That's a 45 vol, listeners. Then as the day went on, we saw also 5,000 of the OCK 27s going up for 30 cents. And then 5,000 more of the June 22s going up for 20 cents. A total, as we kicked off the show, of 17,000 of the Junes and 13,000 of the Octobers had traded today, Mr. Rock Lobster. So I guess the answer for the folks out there in CVE is buy them, sir. Did you see this paper, and what do you think?
I'm looking at it now, and it's impressive.
It is quite impressive, yes.
Yeah, I have right now 13,000 of the Ox, and the June is 17,000. Even more impressive is the June 30s and 35s. The open interest on that are 40,000 and 25,000. So somebody somewhere wants them some CVE.
Some CVE. Who doesn't want CVE?
I mean, and I guess like the high of the year when, everything was all things energy last year was $24. So I don't know what the I mean, I have to say it's in Canadian dollars. The earnings are in Canadian dollars. So I don't know what the multiple is, but it seems, like a pretty, reasonable PE company, integrated energy. They sell stuff everywhere, natural gas, all that kind of stuff. But yeah, I don't think they're unreasonable purchases, but it kind of reminds me of like all the gold buying, just reaching for calls that are 20, 25% out of the money. Or in the case of gold, 50 or 60% out of the money, and seeing what happens. So it is an impressive purchase nonetheless.
I just realized, did we not send you the notes, sir?
I don't get the notes. I don't get the pro box. I get a lot of things.
In our defense, we did not expect you today. All right. So, you're flying blind like me half the time. Makes it fun. There we go. I can remedy that for you there right now. There we go. All right. While you look at that, I will keep us rolling here with the show. Listeners, it's kind of an all CVE day. It's kind of dominating our Eye of Sauron out there. Even though it's a decently active single name day, not a ton of other paper lighting it up out there. So I'll give you a choice, Mr. Rock Lobster. Do you want to break down these two kind of smaller trades, or should we pay off two trades that we talked about previously? Your choice.
I mean, I think we got the flavor of the Synovius at this point. I think it's kind of upside call up. So let's go to some other things we could pay off.
All right, so you want to do the old paper? Okay, we'll pay off the old paper then. We could do that. Let's go out first to a name you may have heard of, listeners. This one kind of in the headlines for the better part of over a year now. It was January of last year when they announced his acquisition. It seemed like it was less time than that, but I guess that shows how long we've been dealing with this up and down here. This is Activision Blizzard, of course. Microsoft announcing beginning of last year that they were acquiring this one. That, of course, getting gummed up by about a lot of regulatory oversight there. Seems like a lot of those hurdles are being cleared now. But either way, Activision Blizzard has been an interesting one to watch. With any of these deal names, chances are we have paper that's coming in to hedge some sort of deal or paper. And that's kind of what we had here. Before we get to that, Activision Blizzard trading right now $85.40 on the year. A year ago, it was $79. Actually had a decent range for a name that's been tied up in M&A for the better part of the year, because it got down to $71. That was in the nadir, I think, when people started saying maybe this deal is not going to happen. And then they rallied it up to 85.5, which is, of course, where it's hanging out right now. So between November and now, it's had a nice little 14-point rally. So nothing to sneeze at out there for a name that's effectively been tied up for over a year. But let's go out here to what we found. This was on the March 27th show, listeners. Just going back a few weeks now here on the show. We talked about someone coming in and scooping up some puts that were this very near dated paper. They were going the way of the dodo at the end of the month, so March 31st, and they were buying 3,000 of the 84 puts. Buying again, end of the month. They paid 48 cents for these. This was when the stock was 84.5, so pretty much at the money puts at that point. So kind of an interesting one. Maybe they had some concerns. Some news is going to come out in the next couple of days that was going to drive their deal position down below that strike. There were no earnings. Earnings are not until next week. They're on the 25th. So it wasn't anything earnings related here. It was just, looks like your standard, hey, I'm kind of spooked. Maybe this deal, something might happen with this deal between, even though I thought by that point it was mostly locked in, but weird paper nonetheless. And the stock went out, listeners, on the expiration just a few days later, 85.59, so well north of that 84 strike. These puts were still open, so it looks like they dropped close to 150 grand, about $1.44 on this 3,000 lot of 84 puts. But hey, Mr. Rock Lobster, I guess if you're a big fund and it allowed you to sleep at night or perhaps have your risk manager be happy, then I guess it was worth it, sir.
I think that ultimately, so they bought those puts, they went out worthless, and maybe they're sitting on a ton of stock that they're going to make a lot of money on in the deal. Is that kind of what you're saying on this one?
That is pretty much what I'm saying, sir. Yes.
I think reasonable. I mean, I don't see why you would buy those things, but I mean, the deal does look like it's going to get done. So it's kind of it's a bit of an oddball purchase. You know, it's a what we'll call it, a maybe. It's a maybe that it could happen. But right now it looks like just those puts went to zero. So that's kind of the way the cookies crumble.
I can think of better ways to burn about $1.50 in 4 days than this, but I guess this is how this person floats his boat. Burning money on crappy near-dated puts in deal names. Let's keep going here. Let's go back a little bit farther, listeners. Let's go back to our March 2nd show. At that time, we were talking about Pure Storage Inc., ticker symbol PSTG. They develop all-flash data storage hardware. I thought this for a second, this might have been the one that was the potential energy name, but it wasn't. This is just a flash storage company. Trading right now, $26, pretty much even, up about 3 cents on the day. On the year, it's been a different story. A year ago, it was trading about $30.50, so they're off nearly 15% on the year. They crushed them pretty early last year to their low for the year of about $22. That was on May 24th. Then they rallied it again, August 18th, 31 and a third. They threatened it again, 31.70 on November 1st, then down again to $26 on January 19th and back up again, $32 about on February 15th. So this is a pretty volatile flash storage maker. And then they came for it hard, listeners. It went from about its high for the year of $32.45 on February 15th. By March 2nd, it was trading $24. And by March 13th, it was trading its low of the year, $21.90. So they really crushed it. And then since then, it has managed to recover a bit of it. It's up to $26 right now. But what we talked about back on the March 2nd show, listeners, this was when the stock was 24.25. So this was kind of right in the after the first leg of that sell-off, listeners, when they crushed it from about $32.50 down to 24.25. That's where it was when we talked about this trade. So they had really come for this stock pretty aggressively. It looks like someone, Mr. Rock Lobster, decided, you know what? This is stupid. This is overdone. And they blasted away at 7,161 of the March 23 puts. They sold them through the bid. The bid was 45 cents. They sold them for 44 cents. That's about a 50 vol. This was right after earnings. It looks like earnings was what attributed to that aggressive sell-off in the stock, listeners. This was a post-earnings put sale here. And the stock ended up going out on expiration, listeners, 24.05. And these puts, go figure, they were still open. So looks like this one worked out, Mr. Rock Lobster. They ended up scooping up a little over 300 grand, about $315,000. So our other friend threw away about $150 in about 4 days. This person ends up making a little over 300 grand in the space of a few weeks. Needless to say, sir, I like this one better. What say you?
I think the seller of these puts like it better too, because this is a much better result. What do they make? Like $300,000 on this one? That's not too bad. 44 cents on 7,100. So that is not a terrible result. But I have to say, that's a pretty bold put sale. You know, there's earnings and all the rest of it, but the stock has bounced around a little bit. It's been much higher, but I guess what they did is they went old school and then really picked a line in the sand. At 24, the stock really hasn't in 2 years spent a lot of time below 24. So, I think that kind of factored into the whole thing, but I mean, it's a profitable company, but I think it was like kind of old school line in the sand put, and they picked a really good but bold level.
Yeah, they get the cojones award. I think I remember saying this at the time, like, oh, I'm not sure selling puts right into the teeth of this sell-off doesn't always work out too well. We see people buying calls sometimes in those types of events for obvious reasons. You're betting on the rebound, you get the leverage play to the upside, and your risk is limited. Risk a lot more open selling these puts in the face of a sell-off like this. But in this case, Mr. Rock Lobster, it worked out. We tip our cap to them as we keep on rolling right on into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, listeners, you've been waiting. You've been looking forward to it. It is now that time, listeners, the time when we unleash Uncle Mike. And for the next 10 minutes of the show, he regales us with why Demolition is the best tag team of all time. Go, sir. Clock is ticking.
I think we're done then.
You can't tell the truth to the people? How dare you, sir?
I told the truth to the people in an earlier segment, Mark. But with that being said, I will tell some other truth to the people related to option trading. And I want to go through what can you do if, let's say, you are in your working years and you still contribute to IRAs, Roths, 401ks, that type of thing, but you make too much money. You've already maxed out your Roth or your 401k. You've maxed out your IRA. Well, what the heck can you do? Well, there's a couple of things with which you can do. Of course, one thing, there is cash value life insurance that can act as kind of a Roth IRA lookalike. Make sure you set it up the right way, because if you do not set it up the right way, you're just buying a buttload of life insurance you likely don't need. But there are ways with which you can use it strategically to set it up as a Roth IRA lookalike type of thing. But what I want to talk to us about today is the wonders and joys of the 1256 contract. So let's say that you want to trade outside of an IRA. I personally prefer to do more option trading inside of IRAs because it makes things much simpler with the tax man, because whatever gains you have, you don't get taxed on them until you actually take money out, not when you sell the position. And with a Roth IRA, you never get taxed on any gains. But let's say that you are in a position to where you have to trade outside the IRA. A couple of things with which to be aware of. Let's say that you're consistently selling covered calls outside of an IRA. Well, let's say you're selling covered calls as the stock's going down and you get called out at a lower price. Well, you're fine with that because let's say you've taken in income the last few months from the covered calls, and let's say you do have to take a slight loss on the stock itself. Well, you're fine with that because you made a lot of money in the premium. If you start to sell covered calls again the next month, or the next day, I should say, on that same stock, you will not be able to claim a loss on the stock. And the reason is there's something called a wash sale. Now, I am guilty of wash sales. I prefer they not happen, but sometimes you got to do what you got to do. But what a wash sale is that if you get out of a stock for a loss and you get back into it within 30 days, you cannot claim that loss on your taxes. So be aware of that. Now, let's say that you are trading a 1256 contract. let's say month in, month out, you're selling puts on the SPX, which is a 1256 contract. Well, within a 1256 contract, there is no wash sale rule that is waived for a 1256 contract. Also, the reason with which to trade a 1256 contract, and by the way, these are most futures option contracts, the SPX. If you're curious as to what other ones that there are, you can always go to cboe.com, or trade futures options. You can go to cme.com to learn a little bit more about that. But the other benefit of a 1256 contract is that 60% of the gains on them are taxed at long-term capital gain and 40% at short term. Now, if you buy a call option on Google and you make $100 on a profit on a Google call option, you're going to be taxed at the short-term rate, which for just about everybody is higher than the long-term rate. Whereas if you do the same thing and make a $100 profit on the SPX, then $60 is taxed at the long-term rate and only $40 is taxed at the short-term rate. So something to really think about if you're trading options outside of an IRA. Just make sure that you have a tax plan for how you are doing it. And that, in honor of tax day, or the tax season almost being over, that is the strategy block for today.
All right, listeners, but the show is not over quite yet. Let's keep on rolling. It's a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block, the portion of the show where you folks take the reins, your questions, your comments, your insights, also your insights on our questions of the week. First, let's pay off last year's, seems like a year ago, last week's question. Is kind of a silly one. It was inspired by our discussion/debate around all this craziness with the whole WWE merger. So we said, hey, inspired by our love of all things 80s wrestling on this very show, the Option Block, what are your thoughts of the recent merger between WWE and UFC/Endeavor? Are you buying long-term calls or puts on the new combined company, which is going to be ticker symbol TKO when it launches, listeners? Our audience, pretty close to split, coming in on the plus side, though, with 60% exactly saying you're going to buy the calls, 40% saying you're buying the puts. So it was back and forth for a while. The calls ended up taking it, but ever so slightly. Interesting stuff out there. I guess you're bullish slightly on this new entity out there. We shall see. Time will tell us on this one. Let's go out to this week's question. And we're asking you right now, listeners, kind of a nice, fun back to basics question. We like to take your pulse on various things every now and then. And this week we're asking you, quite simply, which option strategies are you using most frequently in your portfolio right now? And again, we can't list them all. There's only 4 options, listeners. If you don't see, you're crazy. Maybe you like 1x2 iron condor ratio swaps, whatever your go-to is. If you don't see it there, send it in. If it's interesting, we'll talk about it on the show. We gave you 4 categories. So short puts or covered calls, then long calls or long puts, then verticals or diagonals or time spreads, lumped them all in there, or butterflies/wing spreads. Let's go around the horn. Let's go out to the rockingest of lobsters, Mr. Rock Lobster. Of these categories, if you have a favorite, have at it. Then B, what do you think our audience is voting for?
I was trying to think about that. I'm a conditional guy, most of all. I think the audience is saying covered call, and I have to say still do a lot of it for just making money when you're long some stock. So I can't poo-poo that. So I think. I don't know if it's the thing I do the most, but I certainly do it a lot. So I'm gonna have to say the audience is going with covered call, and I do that a lot. But I also would go to, for me personally, more like vertical diagonal time spreads would be from a strategy point of view. Those are the things I tend to use the most on options. But it's weird. I don't even count covered calls as an option strategy because it just seems like a stock strategy.
It's so remedial.
Call.
It's so remedial to the Rockies. That's not even options. That's for babies. But you know what? Babies like it, and it's profitable. and it tastes good at the end of the day.
Exactly.
Mr. Uncle Mike, do you think covered calls are for babies? And which of these are you choosing? What do you think our audience is choosing?
See, definitely don't think covered calls are for babies, but I think the audience is going to be a little bit more exotic in this market. I think they're going to go with butterflies. And in terms of what I've been trading, I've been selling verticals, but I've been either buying garbage out of the money calls or puts to protect them in case we do get the major move at a shorter term. So that's what I think.
And you're both wrong. Granted, it just went live about an hour before showtime. So it's only in the first hour and change of voting here. But right now, our audience is looking really basic. Long calls and long puts taking it with 50% of the vote right now. 25% for short puts or covered calls, and about 12.5% each. So a tie between verticals, diagonals, and time spreads, and butterflies or wing spreads. I have to say, right now, for my personal use, I might go the latter. I might go the old butterflies there. That seems to be cropping up a lot for me. We didn't really put ratio spreads in there. That would maybe qualify for me a little bit right now as well. But I'll probably lean the butterfly route. But hey, what are you folks up to? Right now, it looks like you're going straight old school, long calls and long puts as we go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's do it. Let's go around the block. Let's see what our folks are keeping an eye on until our next episode. Since we're coming up against it, we'll do a combo of Around the Block as well as what you have cooking that may interest our listeners. We'll start with the Unclest of Mike, sir. First off, what are you keeping an eye on until our Thursday show? Then where should folks go if they want to see the full Uncle Mike content offering?
4,100 Magnet, and consistently trying or just continuing to watch any earnings announcements that may or may not move the market. And then in terms of if you are looking for a financial advisor who believes in the option product, feel free to reach out to me. You can follow me on Twitter at Mike Tusaw, or if you'd like to have a conversation, feel free to reach out to me. Go to my website, stcharleswealth.com.
Believes in all things except crypto, listeners. Hit them up. stcharleswealth.com is the place to go. You ain't flying to no quality in crypto, listeners. That's not for Uncle Mike. But hit him up if you are so intrigued. Mr. Rock Lobster, same twofer for you. First off, what are you watching until our Thursday show? And then B, where should folks go if they want to sample all your wares?
Go to optionpit.com. I am keeping an eye on earnings. Let's see how good the earnings are. Let's see if we can get VIX to 16. And that's kind of where I think we are right now. So, and that's where I is. So earnings, and again, go to optionpit.com, 888-TRADE-01, or go to Money Map Press and look for weekly profit cycles, and you get me in both places. 10% off if you call Ted, 888-TRADE-01.
There you go, 10% off. That is going to do it for the show today. I'm not doing it for the network, at least not yet, listeners. I'll be back in a wee bit, holding court on all things crypto with the Crypto Rundown. Then I do believe, I think my producers have confirmed it. I will check with them, but I do believe I will be joined tomorrow. We're going to have our pro Q&A with Mr. Overby tomorrow. That's been moved to Wednesday. So tomorrow I do believe we're going to have the advisor's option with Mr. Matt, the Oracle from New Hampshire over there. So that should be fun. Kicking off earnings season, dive into some of those reports with him. It was a banner month for options volume. We'll get into all that. What he's looking at in the market right now, all kinds of fun. That's tomorrow. That's going to be 2 p.m. Central. Back again on Wednesday for a trifecta of goodness, a double dose of options boot camp, as well as our pro Q&A with Mr. Overby. So 3 shows for our pro members on Wednesday. Then we're back again on Thursday. Another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.